cool. You guys, thank you so much for watching. This is Shannon Paul with Paul Realty Group and All Stars Realty. And I am here with a rock star of a lender. Her name is Gina Howard. Gina, say hi.
Hi.
Gina's been in the industry for 27 years. Her and I have done a lot of transactions together. We've helped a lot of people. She's always had great rates and closes quickly. And to be honest, she's just someone that I really connect with and can talk finances with. And I want to share my knowledge and her knowledge with the world, because really right now, Gina, I mean, there's a lot going on, wouldn't you say?
Absolutely. And there's just so much misinformation going out there. And, fear paralyzes people and they're not
Yeah.
sure what to do. So
Yeah.
it's good that we're talking about this. I want to get the right information out there because this could highly affect people down the line and they won't be able to get out of it. So I'm
Yeah.
glad that we're talking about this today. We can highlight some of the things and what's true and what you should do in this time of a crisis.
I love it. I love it. Well, in case people don't know who either of us are, maybe they're watching it on Facebook or Instagram or who knows where they're watching this. Why should you listen to us? We've both been in the industry for a long time. We've both been able to help our clients buy and sell. And to be honest, we're kind, we're considerate, we're generous, and we just want to do the right thing. And so,
Absolutely.
yeah. And so today what we're really here about is to understand what is going on in our world and how can we support you. And the question I'm getting a lot of, Gina, and the reason we're on this call today together is to figure out how do we, if we need to, if COVID-19 has affected us, our family, or our clients in a negative way, and we don't have the financial stability to make our mortgage payments, what are our options? So how do we push pause on the mortgage payment right now? And Gina and I came up with 5 reasons or 5 ways, right, Gina?
Absolutely.
Yeah, 5 ways to push pause. So what's the first one?
First one would be don't. If
Oh,
you don't have to, please don't.
okay.
Forbearance does not equal forgiveness, which could result in foreclosure. It's huge. Again, there's a lot of misinformation out there. So if you absolutely do not have to skip a payment, please do not. Pull from your reserves. Take money out of your 401k right now. I know they're waiving penalties up to, I think, $10,000 to be
Mm-hmm.
able to take some money out of there. Borrow from friends or family in the meantime. So anything to avoid the forbearance and deferment. And the reason why is because forbearance and deferment does not equal forgiveness. As I mentioned, it's not free. You're going to have to pay it back one way or another. Forbearance will be tacked on to the end of the loan. Deferment is deferring your payment for 3 months, and then you're going to have to have that due by the 4th month. So on average, a mortgage payment is about $2,500. That's $10,000 you're going to have to come up with in month 4, which is why I say it could equal to foreclosure, because if you're unemployed, how are you going to come up with $10,000 in 4 months when you haven't been
Right.
working? So it's not forgiveness. It's not waived. Don't miss a payment. That will report negatively and as a late on
Mm-hmm.
your credit report, and then you won't be able to refinance or purchase a home for a year.
Right.
The forbearance and deferment, if you absolutely have to, first option would be to contact, if you're unemployed, you've been laid off due to this crisis, chances are you've either filed for unemployment or you're trying to do so at that time. That is your first step. Step 2 is to contact your lender or servicer and ask them what they are going to do, how they're going to handle this. Are they going to do a forbearance? Or are they going to do a deferment? Most out there are only doing deferments. They're not doing forbearance. So you want to make sure what they are doing. And if you can come up with 4 payments in by that 4th month.
Mm-hmm.
Forbearance is the best way to go, obviously, but not all lenders are willing to do that. So you want to make sure before you make your final decision on how you're going to handle this.
Yeah, and that's those 2 steps you said was number 1 is file for unemployment, correct?
Correct.
And number 2 is call your lender or your servicer, whoever's taking care of your loan currently, who you're making the mortgage payments to.
Correct.
Okay.
And there is the CARES Act. And if you have any other questions in more detail, you can always contact me and I can get into that further with you.
Okay, great. Yeah, I'm sure there'll be comments below that we can
Yeah,
answer those questions for sure.
absolutely.
Another option that I have on my list of 5 is a refinance. How does a refinance look right now?
Absolutely. Refinances are still looking good right now. And if you are still currently working, This would, and you don't have the reserves. We know living in California, wherever you might be, most of us live paycheck to paycheck. Who's got 6 months of reserves? Not a lot of people do.
Yeah.
So where your money is in the equity of your home. So now would be a good time to refinance, maybe pay off some debt, take a little bit of cash. I'm not saying take 50 to 100,000 and just put it in the bank or go blow it. I'm saying have some reserves, have some backup. Use this time with the low interest rates. We're still in the low threes, as long as you have great credit, and do it, and have that on hand so you can use that. And again, instead of, say you haven't been laid off yet, but it might be coming down the line, we're not sure. You've already done that, and now you've got a little bit of backup just in case. Or if it doesn't happen, you can put that money back towards your principal. But it's
Awesome.
always good to have 6 months of reserves on hand if you can, whether it's a 401k, whether it's in your savings, a money market, have
Mhm.
something, because we never know. Look, we did not anticipate this, right? How could we
Yeah.
have?
This
So
is
a
something
lot
no
of
one
people
ever predicted. Yeah.
caught off guard. Absolutely.
Yeah.
So refinance would be a good time to consolidate your debt, lower your rate, and maybe take a little bit of cash and put that in some reserves.
Yeah. Well, that was my next point. You keep getting it. You know this information like the back of your hand.
I only
The
do
next
this
point,
every day, all day.
right? Well, the next question was, how does it look to take cash out of your property? So,
Yeah.
can people use the equity in their home right now to take out 50 to 100K or whatever they need, 25K, 10K, and use that as a cash reserve?
Yeah, I would say, no more than 6 months. You really don't want to borrow more than more than you can, bite off or chew, because then obviously that brings your principal balance up, and then it kind of defeats the purpose of lowering your payment and still
Okay.
having a little cushion. I'd say maybe 6 months of reserve, so that's
Okay.
6 times your monthly mortgage payment. Have
Mhm.
that little cushion. And like I said, if you don't need it, you can put it into home improvements. Maybe you're planning on selling in the next year. You if you don't use it for the home improvements, or maybe you want to, once we get past this and you still have that cushion, put it into your home, and then that way you can put it
Yeah.
on the market and be ready to sell.
And that brings us to our fifth point, Gina. Look at you, just hitting them all. So the fifth point is just like you said, perhaps it's a time where, we've all been quarantined in our house for a long time and we are itching to get out and find that dream home that we've been waiting for. And if you still are employed, you can use the equity in your home to get into a bigger home for equal or similar payment. Or if you're not in a position where you want to go up, you can go down. We can sell the house, use that equity to pay down the next home and actually have a lower mortgage payment on your next home.
Correct. Just one thing I want to be clear of, because I do get asked this a lot too. People want to borrow against their current primary residence as cash out to turn
Mm-hmm.
around and buy their next house within a few months. You cannot do that. That is occupancy fraud. If
Okay.
you're going to take cash out of your primary, you will sign paperwork saying you're going to stay in this house for at least a year. So if you're going to borrow against it, you have to be there for 12 months before you buy your new primary. However, you can still buy as an investment property, or you can refinance your current home as an investment property to take the cash out and then put it towards a primary residence. You just cannot own two primary residences within a 12-month period. So just want to
Okay.
be clear on that, because I do get that question a lot. And
Yeah.
with the rates being so low and a lot of equity in people's homes, are like, hey, can I use this to buy the next one? You can,
Okay.
but there's stipulations. So just be careful of that, because I don't want anybody to be misinformed or misled, and they go and take cash out as their primary. They get that low primary interest rate, and then
Yeah.
they can't buy a new home 2 months later. So
Right.
to be
Right.
clear, yeah. We
Okay,
will catch
good.
it. People
Yeah.
ask, how are they going to know? They're going to know. We run data verify. We run a lot of backgrounds to make sure,
Yeah.
because we don't want what happened in 2008 to happen again now, do we?
No, we don't. And thank goodness all the lending standards are much tighter now that we're not,
Yes,
expected to see 2008 again. So that's really
yes.
important.
Yes, absolutely. And they have tightened up some restrictions on lending right now, just so people will know that
Hmm.
they are enforcing higher credit scores, lower
Yeah.
debt to income ratios. So just be aware of that. Make sure you're staying on track with making your payments, making sure you don't have anything late. If you're working on paying off credit cards, pay them down less than 40-50% to get those scores up to the 700, so you can align yourself to be in a great position if you're going to refinance or buy in the near future.
Perfect. And that leads me to my next question that I'm getting every day is, how are interest rates? We've heard they're historically low. So how are they?
They are. They are. I mean, we had a major improvement in the beginning of March, as we all know. And
Yeah.
then, oh, here comes the coronavirus. And that forced the feds to have to lower the national rate, which down to zero, which, again, to clarify, feds reducing the national rate to 0% does not equal lower mortgage rates. I know there was a lot of confusion because the media doesn't clarify that.
Yes, it sure
In
is.
fact, it can impact the mortgage rates in a negative way. So when they dropped it to zero, that was to allow the banks to lend to get us through this situation, and it drops the short-term rates like credit cards, auto loans, things like that.
Okay.
But mortgage rates actually went up, and they got worse. Everybody panicked. The feds were buying triple the amount of mortgage-backed securities because fear, panic. And then once they started backing off and getting back down to what they were normally buying, which I believe was 5 billion instead of 50 billion, we started to see rate improvement. So we are back down to the low threes again with good credit scores. We're still in the threes, especially on purchases, which that's what movement mortgage is all about, is purchases. That's our primary. Yes, we do refinances all day long, but we thrive on purchases. And so our purchase rates are just insane. I've locked a few in the low threes already. So,
Awesome.
and we can close in 21 days. So now's the time to buy. Take advantage of the slower market. You don't have the competition, Shannon, right? You don't have the 200 people flowing through an open house and
Right. Well, it's interesting. This started off as a topic of how do we, figure out our debt if we have mortgage, but honestly, it's an amazing time to buy. And our reputations are on the line if we give misinformation, to be quite honest, right?
100%.
And with all the competition, we would be writing offers on houses and we would see 8 to 20 offers on a house, and on the opposite side is the seller, same thing. And now as we're going in, we're seeing maybe 5 offers on a house.
Right.
So my buyers are calling me every day, Shannon, are we going to see 2008? I want to pick up a property for, $300,000 less than what it's worth. Right. And I don't want to be the bearer of bad news, but I have to educate my clients and let them know that, we are in rough waters and unemployment is high, but it's not affecting the housing industry and it's not affecting our values, which is great. We all want to live the American dream here in California of owning property. And it's neat to see that we actually have an opportunity to get our clients in where we wouldn't before.
100%. And that's why it's so important. I can't stress enough that please, if you do not have to skip a payment, because that will also affect the mortgage and the market. So the more people who don't make payments could potentially lead us down that path. And we don't want to go there. We don't want to see another 2008. This is a natural disaster, not a financial disaster like in 2008. So no, the market is not plummeting like everybody anticipated it. But if more people just jump to the conclusion that, or the assumption that everybody can just miss a payment because we're under this crisis right now, whether you're working or not, that's what's going to lead to a downfall. And when you wish for the market to crash, that also means you probably aren't going to have a job. So think about that. Just because, that's what happened in 2008. Sure, yay, values came down to, 200,000, but nobody had a job to buy.
Right.
So you got to be careful what you wish for and make sure that you're educating yourself and you're making a smart choice before you do anything about skipping a payment or deferring or forbearance. Because like I said, and back to what we started with, forbearance does not equal forgiveness, could end up in foreclosure. And we do not want to see that happen ever again.
No, we already have a crisis on our hands. We don't want you guys to have a financial, interpersonal conflict with your own, home. So
absolutely.
Thank you so much, Gina, for all of the information. Welcome. This has been amazing. I hope all of our viewers are getting as much out of it. If there's a question that you'd like answered, please send it to us, DM us, comment below, wherever you're seeing this, reach out to us. We're happy to lend a hand. Isn't that a funny coined word? Lend a hand to you and figure out how to best support you. To be honest, Our number one goal is to support you and give you the information that you need to best suit your situation and your family. Whether you can make the payment or you can't, we're here to support you and guide you every step of the way. Number one, safety first, you guys. Stay healthy, stay safe. This is a crazy time and we're all going to get through it together. And you know what? Knowledge is power, and lend a hand anytime you can. Love
Absolutely.
you guys so much. Gina,
Thank you
thank
so much.
you.
Thank you, Shannon. I love that you're putting out this information. Thanks for letting me be a part of it. And I look forward to doing more of these videos with you and educating our clients together. Go
Me
team.
too. Go
Stay
team.
safe out
Thank you
there.
so much.
Bye-bye. Thank you.
Bye.